Without further ado, we must take a look at Roku, right? This thing was a volatile trader in after-hours trading after reporting earnings, so let's delve into those earnings and see what's going on. Now again, down 5% after hours, but it's a stock that I can't lie, since its dip in March is up 159%. Even if you look 5 years out, the stock's performed pretty darn well, around 618% up, but let's delve into this stock and see what's going on with this report. Overall, GAAP EPS of negative 35 cents, beat by 20 cents. Not a profitable company. It hasn't been. It really hasn't been at all. So that's not an unexpected number. Good beat, though. I will say it's a good beat. When you beat like that, I like it. That's what she said. Revenue of $356.1 billion. No, that's insane. $356.1 million, up 42.2%, 42.4% after hours. Help me. 42.4% year over year. Now here's the deal. If I'm having a stroke, you got to tell someone, okay? I think I'm okay now. It was just a minor one. Beats by 41.58 million. See, we're back on it. We're on it, baby. Active accounts, 43 million, which is up 41% year over year. Now that's the story for this stock, and that's what keeps it rocking higher. Despite profitability issues, active accounts grows just rapidly. Active accounts grows rapidly. That's all, folks. That's what I sounded like for a second there. Average revenue per user of $24.92 is looking good as well. So, what do we have to look at there? We forgot to prep. Oh, sorry. Account growth was exceptional. Wow, don't you dare pop up on me. Revenue growth massive, led by the platform revenues rising 46%, and player revenues grew 35%. Platform being obviously the streaming platform, and player being the Roku sticks, the devices. Gross profit rose a healthy 29%. Gross margin fell 443 basis points, though. Definitely scary, led by an 886 basis point decline in platform margin. Scary to see, because platform obviously is the main portion of this company and will continue to be. Operating loss swelled to $42.2 million from a year ago loss of $10.4. You don't like to see that increase. The company is going in the wrong direction as far as that's concerned, but it could be worse. Okay, let's be fair. Streaming hours rose 65% to 14.6 billion hours. That's a lot of hours. A lot of hours people be watching stuff. There's no doubt about that. Company reversed its previous announcement saying Steve Louden would remain chief financial officer. That's right. He's not out. Let's look at this shareholder letter, okay? And with this, obviously, they give you this nice little difference. You can see from Q2 2019 to Q2 2020 where that growth lies. You know, it's everywhere. Average revenue per user is up. Streaming hours up. Active accounts up. Why does a man go from the bottom to the top? Because I am Drake. Okay? I'm Drake. I don't know if you knew that, but I am. And you see growth, obviously, in player revenues. Q4 is obviously massive for player revenues, so that's why you see this big number in the middle here. Obviously, this is the Christmas quarter, so that's why there's a lot of players sold. But you've seen continued momentum through this year. Gross profit, don't like to see that. Player gross margin did rise, but it's not a beautiful amount. Player margin, that's the scary part, is this platform margin, in which you see declines from last year, steady declines. That's not what you want to see. So total loss of 42.2 million versus 55.2 really last quarter. So it's been worse, but again, it's worse than last year's was, which can be a concern. They mentioned obviously CFO is staying in place. And obviously now they sell the stock in the shareholder letter. The importance of streaming worldwide, obviously it is. So it was a successful quarter for Content Partner. Roku was the number one connected device based on hours streamed for Disney Plus. So again, they get money for partnerships because it's just a platform that you use to stream other apps on. So it's a good portion of their money. Disney Plus will stream more on Roku than anywhere else, which is fair. I have all my TVs are Roku enabled. Let's be fair, and that's what I use to stream Disney Plus when I stream it. Not too often because you know me. We were only leaning away from the mic because we were falling asleep. It's okay. The number one streaming platform in hours in the U.S. by hours streamed according to Cantor in May 2020. Good for them. So we see good stuff. New live TV channel guide is important. We love live TV with Roku, don't we? Advertising outpaced ad industry trends. So according to Magna Global, U.S. TV advertisers spend is expected to decline 24%, and digital advertising spend is expected to decline 5% year over year. So they're expected a little bit less in terms of that revenue, which again probably hits their bottom line as well. If you talk about margin, for sure, because that adds to their margin. In June, Roku kicked off an IAB New Fronts as the first company to present and reached over 600 virtual attendees. You know, that's pretty cool. Our new shopper data partnership with Kroger that targets and measures advertising using retail purchase data. Good for them. Doing more than just what they're told to do. You know what I mean? I feel like I just got choked up there and couldn't speak. I just really starting to cry a lot lately, Total current assets on this company. Let's talk about these bad boys. 1.2 billion. That's right. They're in the billions finally. 1.2 billion versus 925 million 6 months ago. Good improvement there. 1.8 billion versus 1.4 billion 6 months ago. I'd like to see the assets not rise by as much. Closing my eyes and hoping for the best. I'm not going to fall asleep. Total liabilities. You stinker. They rose, but not nearly as much as they rose the total assets. So I appreciate that for them. Total liabilities of 830 million versus 771. So stockholder equity did rise to 1 billion versus 698 million. Good growth there. I mean, what else do you like to see? As far as the stock itself, you could say there's some arguments to be made. Trading at a market cap of 20 billion for a company annually right now making, to be fair, let's say 1.5 billion, right? We could say that and be fine. Probably closer to 2 billion, but after this year, but let's say 1.5 billion if we're going more off last year's. I mean, you talk about trading it, really closer to 17 times the market cap, and you may get concerned. For sure, no PE ratio because the company is not profitable. And I do doubt the valuation on this one. Like, hear me out. I do doubt the valuation that this stock holds, and I'm not a huge fan of the valuation. So if you're looking at buying in, I don't think these are good levels for you to buy in. But I think if you're already holding, stock could be good for you in the long term. And it should be, but not to buy in at these levels. That's my opinion on the matter. Really hope you enjoyed.